This conference will now be recorded.
Couple more minutes and we're going to get ready to start. I see we only have 16 people, and I've noticed people do come in a little bit late. With that being said, please tell me 3 goals that you have for this year. It doesn't have to do with trading. It could be personal, family, changes, whatever it is. Let's open ourselves up. Let's write down some goals. This is one way of getting creative in the mind, getting logical, and also opening up more to understandings. Oh, I love that, Davis. His second career in baseball. Brilliant. Anthony, that is having more structure and discipline as a trader. What's your goals? Goals have to be achievable, goals have to be relatable. Secure Series C funding at my startup. Beautiful, Derek. Be a great father. Oh, love that. And run half a marathon. Oh, that'd be brilliant, Derek. And by no means is Derek a small fella. So that's a beautiful goal. If you lot don't know Derek, and that's why Davis is joking, he is a big boy. Oh, that is brilliant, Derek. Congratulations. I'm sure you're feeling a lot healthier as well. Sleeping better, I'm sure. Love that, Ellie. Learn and indulge myself in trading. Okay, I think we're going to get ready to start. It is now 11:03. So before we start, as we're coming near now, this is class number 5. How are we all feeling about classes? How are you guys enjoying what you've had so far? Love it. Learning a lot. Very clean presentation as well. Appreciate that, Davis. Wanting more. Ellie, Donna, outstanding. Thank you, Donna. PJ, eager to keep learning. That's what I love to hear. Learning and applying every day. Brilliant. So, as you can see, don't want to keep saying the same thing. If you haven't, please do follow us, all the social handles, like, comment, all that other good stuff that they tell you to do. Confidentially notice and disclaimer. I'm just going to keep this up for another 30 seconds to a minute for those of you who have not read it or those of you who need to be refreshed on it. So much to learn. Thanks, Doug. It always is, Sid. We can never stop learning. I can tell you right now, I've been watching closely in regards to day trading, how things are changing, and I've been testing new methods. I've also noticed in options, they work far better than they used to. Why do you think I'm recognizing that options are meeting targets to a higher percentage? Buying is even clearer. Volume when needed is even better for certain setups when we know they want to swing to a new price target. Why do you think in the last year I have been noticing, especially in the last 4 to 6 months, that a lot of these targets do get met? Why do you think that's happening? Or why do I think that's happening? Algos! Absolutely, Kevin. It's algos. I'm noticing that the more and more that the algos are involved, they are basically programmed to do certain work. To that formula is pre-programmed, so they're conditioned to what they need to do. So I'm finding that. So this is a beautiful time for you guys to learn and my option strategy. I think the timing was absolutely perfect to bring this out and to show everybody. So with that being said, let's continue on. So now here comes the ending. So up to this point, we've learned how to read prints. We've learned how to set up the platform. We understand how long term, mid term, short term works. We understand how to create the play. We understand the 7 point company analysis, so we can understand more about the company itself within its own segment, within the greater market as well. And now the basics of executing the play in options. Tips for executing the trade in your options account. Make sure to keep the sweet spot in mind. No more than $2.50 per contract, minimum 4 months out, stagger the strikes if the strategy calls for it. So before we go and talk about this is um, very basic and doesn't need much explaining. But there was something yesterday, and I'm sure you all saw it from Trevor, who was asking me a very good question in the room, in the options channel. And the question he was asking was in regards to I believe SMCI. The one thing that I want you all to know is that this strategy that I'm teaching you is a high percentage strategy. It's based upon you being quick to see the starting points of the build and the acquiring, so the starting time frame or starting moments when their plan is starting to come into fruition and they're doing the first stage of acquiring. This is key because this is still a time where it's pretty much under the radar, which means that they're slowly going about their business and acquiring before all the interest and exposure comes their way. The prints are going to tell us where it's going to go eventually, but being quick to find and see those prints and follow the strategy and place your options is going to put you well ahead. Because the second the stock becomes viral, which means everybody's now looking at it, everybody's hearing about it, everybody's jumping in, what's going to obviously happen to the premiums if you're playing options? Type it in the room. What do you think is going to happen to the premium of these options once everybody is involved? It's going to go up. Now, if you looked at SMCI currently, and yes, we see all this lovely buying at 60s and so forth. When did we start talking about SMCI? If you remember, I'm the one who started talking about SMCI and saying to you all, this is ridiculous buying. And it was after it dropped massively. And we haven't stopped talking about SMCI. But who remembers what price point that was? It was in the 20s. That's right, Millen. It was under 30. But honestly, it was in the 20s, low 20s. What did we see at that time? We're seeing beautiful buying now, but what did we see under 30? Was there any difference? We see great buying right now. What did it look like under 30? It was exceptional build. That's right, Kevin. You think this is beautiful? Who remembers how they just literally took every single share and built their foundational positions? Who remembers that? I love that. What's a great analogy from Davis? So, for want of a better analogy, and to be quite honestly, I think this is the perfect analogy, Davis. It's almost like we are buying the seed, not the tree. So, before it grows and sprouts and grows into this giant tree, you're getting the foundation. You're getting when the seed's planted. You're getting it when they're starting to water the seed. Beautifully said, Davis. So obviously, once everybody's involved and this thing is moving and the range now has expanded due to the huge volume and interest, the premium's going to go flying out the roof. So let me ask you another question. This strategy requires this is a very high percentage strategy. That means that you cannot pay more than 250. You shouldn't be no less than 4 months out. And that also means that you got to be quick to the punch. This is not, I don't know how many of you have ever seen boxing. The last thing you want to do is get battered for 10 rounds and in round 11 and 12, now decide, let me try to win. We're going to start off with this strategy. You've got to be quicker. You've got to be at your computer. Let me tell you something. If you think you're going to be a successful options trader using my strategy by keeping Discord on your phone only, expecting everybody else who's there at their platforms to give you and feed you what you need to be successful, let me give you a absolute honest answer on that. What you put in is what you get out. Who's ever heard that saying? What you put in is what you get out. Who's ever heard that? Who believes that's true? Who believes that's true? Who's heard the term, there are no free lunches? Who's heard that term? Brilliant. So I want this on recording and I want this to be very, very clear. Do not expect success to find you because you're part of it. Do not expect other people to take you to success. When you start, let's just say, and of course, a lot of you do not have, whether it's school, whether it's work, completely understand you can't be at a platform every morning. That's fine. But let me ask you something now, and I'm going to choose one of you. Let's just stick with Davis. Davis, if you're working a full-time job and you're like, listen, I'm going to do this option strategy, but I can't actually be at my platform every day. Completely understandable. Now, here comes Tuesday morning. This is one of the days that you've got a full morning of interviews or meetings, whatever it is, and you've got your computer up on the side and you're looking in Discord. You have just one laptop with one workspace, so your platform there. Now you're seeing Doug, who keeps talking about a stock called ABC, great buying at 8. The next day, Doug keeps talking about great buying at 9. Doug says this has the buying for 12. The next day, Doug says this type of accumulation is more so 15. Are you just following Doug, or is that stock up on your workspace and you are now notating and following how this buying, how this acquiring, how this building is? Are we short term? Are we mid term? Is that your responsibility or mine? Is that Doug's responsibility or is that your responsibility? Once we set the basis, who has to do the work? Thank you. You need to own your own trading. Now, let me ask you another question. In the same instance as OKLO, IONQ, HIMS, SMCI, oh, I could go on and on. We've had so many great ones. DJT. If you're following correctly, following every single day, watching the stock that you are now paying particular attention to, following the buying, doing the work, and seeing that this not only has short term possibilities, but now there's so much buying, midterm and long term come in. Should you be staggering the ladder or should you just be saying, I'm going to go 1 month out or 4 months out and do what you want? I'm giving you guys a complete and utter, very high percentage strategy, but you got to put in the work. If you foundationally start seeing the buying that can easily go short, mid, and long term, you guys do the work. I'm teaching you how to stagger the ladder. Do it. Now, if you don't do the work and you miss all of that, and that's your own fault, and then the stock starts flying, now you're like, oh my God, the premiums are at the roof. I can't even go 4 months out for $2.50 a contract. I am so out the money. And you decide to go, well, there's so much volume. I think this can make it in a month. And I can get something decent for 250. Is that my problem? Is that my strategy? Is that what I've taught you? Have I taught you that? At that point, you're a lone ranger, and that's your adaptation. That is not my strategy. Do we understand that? Are we clear? Exactly. You'd be changing the percentages. Do we trade in dollars or do we trade in percentages? Which one do you think we trade in? What are we worried about? Will, if you trade in high percentages, do you think that would take care of the money at the end? So then why give any concern or attention or focus to an outcome that you can't control? So if we can't control the outcome, what can we control? And I want it in capital letters. Type it out. Capital letters. That's how important this is. We are process driven, not outcome driven. Has anybody ever heard of an outcome driven process that gave you 80+% or 70+%? Has anyone ever heard of that? It doesn't exist. Why doesn't it exist? Because you can't control the outcome. You can control the process. So I'll repeat to you all. This strategy requires you to be 180% in your process to get a 70 to 80% process outcome. If you want to step into this and hope that through a little bit of information and by following on Discord and seeing what Doug and all these other great traders who are taking the time to watch the stocks they enjoy, because let me just say something, and this has happened in less than a week and a half. And I was telling Millen this morning in the gym, I am so pleased to see, and I absolutely mean this, it's so nice to see and refreshing how many of you have already taken up your own stocks and started commenting and following for the group. I'm seeing Trevor do it. I'm seeing Austin do it. I'm seeing Kevin do it. Millen do it. I think I saw Tim do it as well. Shams is doing it. All I can say is I'm absolutely so happy and proud to see that. And I love how some of you are owning a ticker, making it yours, being accountable for it. So I just want to say all of you should be so proud of yourselves for putting in the time and effort already. So just keep doing that. I mean, do you guys notice? Who's noticed even a little print that they try to hide? I will find it and I will make sure that I give it to you all. Today morning, what print did I put in the room that happened at 9:30:01 market open? Whatever happens, 9:30:01, 1 cent. Sorry, 1 second after the open. It's still the open. And how many shares were purchased? And it was open market. I saw it print and I saw the relative volume for those prints. How much was it? It was about 750,000 shares. How much is 750,000 shares in terms of dollar value or their investment? If it's an $11 stock, you can just give me a roundabout number. To say 7.5 to $8 million, because here's the reality, Millen. If we saw them take 750,000 shares, do you think that's all they took? They went up there and bought two and printed whatever was at 11, or do you think they were buying everything up to 11 and possibly down as well? Would it be safe to say, let's say they had at least 1 million shares there? Would that be safe to say? By seeing that someone quickly took 1 million shares and then it comes back down, is that something smart to spot? Does that give us a little bit more of an edge? Does that give us a stronger hint of where this could potentially go? Are those small nuances important in order to really make this strategy stronger? Exactly, Millen. Paying attention pays. You know what? Everybody type that in the room. I love that. Paying attention pays. Everybody type that in the room. So please remember, this is built on a high percentage understanding, requiring higher percentage performance and process. If you do not, you will find yourself many times missing the move. What typically happens when you know this build was going on for weeks, but you weren't paying attention, or you decided not to strategize your play or complete the options understanding with a 7 point analysis, creating your play? What's the next thing that typically happens to everybody? And you typically go into a very low percentage trade, and good chance you might lose. But what's the word? What is it called? Come on. FOMO. You don't want FOMO. And let me tell you something else. With what we're learning here, based on Prince, should you even be part of the FOMO crowd? Is there any reason you should be part of the FOMO crowd? How can you be? I'm teaching you a strategy based on Prince. If you become part of the FOMO crowd, my word, I am going to tattoo on the back of your neck and on the front of your forehead, ridiculous. There's no way you should be. So, now that we got that part out of the way and on recording, let's carry on. Analyzing the trade. Reflect back on the trade. So once our trade is done, that does not mean the work is done. Let me ask you something. If we have a trade, it hits its price targets, volume comes back down, it resets, it loses its high interest level. Are we done? Is that company done? Does it get removed from the stock market? Does it stay dull forever? I'd assume not. So, what we need to do, one, to understand how we concluded the trade and the stock, we also want to make sure we leave some crumbs of understanding about where this stock could go later on so we keep following. But two, in order to always improve, which means being able to either maximize what you didn't maximize, whether it was you held on too long, whether you didn't add more calls, whether there was some pertinent information you disregarded, you've got to go back and analyze your trades. To me, this is the most important part of the trade. I don't care if you made 30x on your money, or you made 30% on your money, or you lost. Do you think it's important to analyze your trade after you lost or took a loss? Here's what I'm going to tell you. Everyone will tell you that it's more important to analyze your losses than your wins. Well, I'm sorry. They're both just as important. Your losses teach you maybe mistakes you made, or maybe your losses would teach you that you did it correctly and it just didn't work out. Your wins could also tell you that you took the least of what was available to a high percentage. How many of you have took a trade that had an 85 or 90% chance there was $2.50 baked into how much you could make, and you left after 30 cents? How much of you have done that? And who felt worse doing that than taking a loss? Here's the difference in trading as opposed to wins and losses in different fields. A win is a starting point of a marathon of success in trading. A win is nothing, because there's so many ways to win more, to win better, to maximize, to optimize. If you're running a race and there's 5 people in there and you won, That means you were faster. You had a bit of strategy, a bit of better metabolism. In trading, because there's so much involved in the management, there's so much involved in the potential, just to simply say a win and a loss is not correct. I can agree that we can have basic understandings on losses because a loss is a loss, but on the wins, I want you to put even more emphasis on your wins. Does that make sense to you all? Perfect. So when you reflect back on the trade, did you meet your price targets? That's the absolute basic. Because most of you, I bet you, are not even holding on to your price targets. So, did you meet your price targets? If that stock went to your price targets in less than 4 months, do you have an excuse? That's the strategy. And let's say in 2 months, 2.5 months, it went to the price target, then it met the strategy. If it didn't go to the price strategy, we need to know why. Was there some news? Was there something else? Was there competition that came up with a product? We need to know what it was. How did you manage your position? And when you say manage your position, is if you had a position 4 months out and you met close to the price target in the first month, you have no excuse to manage your position. If it was not moving in the speed that you expected and it was rather hovering and treading water, and 2.5 months or 3 months in, it meets your target, are you taking off more or less if it met it in the first month? Now, when I say meet your price targets, let's just assume there's an extension of a second price target. The first price target, let's assume now, was 80% or 85%. The second price target was 70%. I'm just giving you something out here. So if the first price target was met in the first month and your position was 4 months out, I'm sorry, your contract was 4 months out, but you hit your first price target in less than 30 days, but you know that the amount of buying you saw and it all occurred in less than a month, that it has the ability to go further. Did you manage less or more than if you hit your price target, let's say 2.5, 3 months out? What would you be doing? Now, somebody go one level higher. Somebody give me one level higher. Davis, Derek, Austin, I expect more from you. Help your fellow students out. You're taking off less if it happens in a month, knowing you have more to go. What should you be thinking? Beautiful, Millen. Manage less and maximize. Stagger out. So if you get a pullback, you can always go out another 4 to 6 months. That's called maximizing. But if you are treading water and it's getting close to 2.5, 3 months, and you've only got this for 4, and you definitely got to manage a lot more. Now, let me ask you, without even thinking or seeing or creating a situation, what percentage am I just taking off without thinking twice if it's about 3 months out and I'm not even thinking twice? Nope. Come on. High percentage disciplined trading. 90%. Thank you, Davis. Thank you, Millen. Thank you, Brish. Millen, not 80 to 90. It is 90%. Because why do you need to manage basically your entire trade has to come out? Why? What starts happening as you get closer towards the date? It's time decay. Along with time decay, if any of these big institutions, because remember one thing, if you're following market makers, what else do you think they're doing? If we can time the targets that they need to reach, What do you think they're going to be doing to their positions when they reach those targets? They're going to be managing as well. They could have options, massive positions and options. They're doing the same. Remember, as they go in, you follow. When they leave, you follow. It's, as Davis will know in accounting terms, it's basically like FIFO, right, Davis? First in, first out. Accounting or inventory, or that's exactly how it works. You're just a follower. Don't get lost in sea because you want more. You will drown. Add back when percentages allowed for it. That's what we just spoke about with Millen. Did you take note of external conditions that could affect the trade? So, for instance, let's say you're in there, everything's looking great. Then some news comes out, and the news adversely affects your trade. What must you most likely do? So, let's say you're looking good and you're 2 months in of a 4 month trade, or 2.5 months in, and now some bad news comes out, or something that adversely affects your position, and you can start seeing some selling. Are you going to have a hope factor, or are you going to start managing your trade just off that? So let's say you're up 100%. Let's make life easy. You're up 100%. News comes out. Let's say you were in the HIMS trade when the Amazon news comes out. Are you going to sit there and say, no, I'm still going to follow all these millions at 30? Not saying that those millions didn't know about it, but what can happen to the time frame of the trade when adverse news comes into play? What can happen to the time frame of the trade? It can be extended. And here's the beauty about it. Not only can it be extended, you get to take off some of your profits. Then what can you do once that selling is completed and you still know that buying up top was strong and firm? You can get back in at a better price. Perfect, Davis. Thank you, Austin. You guys are brilliant today. You guys are answering these questions so brilliantly. I'm getting the perfect responses. You guys are doing really well today. Now, do not forget the calendar time of the year. That's why, as I was getting ready to teach this course, did you notice how I told you all what was going to happen towards the end of last year and in January? Did I not tell you all what I suspected would happen? Did it happen, Millen? Did it happen? Did it give you an opportunity to get your calls back in at a far greater price? Yes or no? That's paying attention. That's understanding some common sense. I told you why they do that to a high degree. And you know what happens in the end of the year. Don't forget, if you're an institution, if you're one of these public traded companies, whatever you may be, you have investors. So come the end of the year, you got to start selling. You got to show them what their returns were. So keep that in mind. Economic or environmental events, impact from other segments or industries. We've gone over this. Earnings, if strategy called for a longer term hold. Money flowing prints opposing initial perspective. So the last one is basically everything we've seen has aligned with the strategy or our play. And then all of a sudden, all you see is massive, 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 massive selling. Do you rely, and here's something so interesting, I've even heard it in the room at times. If you see the buying before the news, do you think you're going to see the news before the selling if they're getting out? If something's about to change? Think about it. Do you think they even know when thing might hit, when, as they say, shit might hit the fan? Do you think they might have an inkling about that as well? It's not just they know when things are great. A lot of times they're going to know when things are about to get bad. So if you start seeing massive selling and there's no news, but you want to hold on anyway for hope. In fact, let's type that in the chat. Don't hold on to hope in trading. Don't hold on to hope in trading. Type that in. There is no hope in trading. What is hope equal to in trading? Let's see who's got this answer. I know Davis is about to type this, so don't type it. Hope is equal to what form of trading? A form of trading we do not do. It starts with a G. Thank you, David. Gambling. Hoping is gambling. Type that in. Hoping is gambling. Hoping is gambling. Get that through to your heads. We can hope about everything. I can hope I'll be 6'3" and a billionaire. We can all hope. Hope is beautiful. It's about as eventful as a great dream. Leave it alone. You can't bank on it. So no hoping, please. Right. Reprocess the mindset through the trade. Analyzing the psychology of the trader. Your mindset iteration through managing the days in the trade, focused, adapting to new info, outcome driven, lack of attention. So your mindset iteration through managing the days and the trade. What does this mean? How many of you not only have bad days but can have bad weeks or longer? And what I mean by that is you're just off course, you're not paying attention, you're lollygagging around doing nothing. You're just trying to get through the days and get your mind right and say, you know what, next week I'll be better. Give me a couple of weeks. I need this. I've had a tough one. It's been so hard for me. Who's one of those victim mindsets who quickly can fall into that victim mindset and give themselves pats on the back for a good week or more? Who's one of those people? Just be honest. This is not calling anybody out. We've all go through it. Everybody's done it. Do not tell me you have not. If any of you are not saying yes, you're bloody lying. Of course you have. We all have. Now, the reality is if you're in an active options position and you decide to turn yourself off for a week or two, do you think you could miss the right exit, the right pullback and add, a lot of prints? Do you think that could happen? Absolutely, you will. On top of that, when you go into that mode and you go into that standby mentality, what's the first thing that you're going to try to do? One, hope that your little app on your Discord is going to feed you what you need, but there's also a good chance that your emotional intelligence will fail you. You'll start getting triggered, irritated, like, oh my God, what's going on? My position is going down. What am I doing? You lose the discipline. Although you don't need to be here like us as day traders, and you simply need to just follow the prints, which is so easily done on your own workspace, you can never ever thwart away from being a disciplined trader. The second you lose and lack on the discipline, you gain an abundance of emotional unintelligence. So type that in. The moment I lack discipline is the moment I gain an abundance of emotional unintelligence. Type that in. Very, very important. This is me speaking to you as a trader for over 11 years. This is me teaching you my mistakes. This is me teaching you what keeps me consistent. These are all the things I'm trying to teach you lot today, is my 11 years of experience. Are we clear on all these intricate points that I have mentioned so far? Very important for you guys to know that, okay? What did you learn you need to strengthen both mentally and emotionally? Are we seeing how that plays into the next point? As the trade was developing, were you keeping your options tracking template updated? So remember, once you see all the buying, you're like, oh, it's got to go to this price target. You go in your Discord and Doug and Anthony and Kevin and Briesh, and they all say the same. Does that mean that you stop following your trade? Does that mean you stop tracking all the buying? Make clear understandings of how much. What's the anticipated first, second, and third price targets? What do our time frames look like? We need to make sure we're doing that. The second you create the play, your 7 point company analysis should be done. You should know everything about that company. Davis, we're going to be sending it all the resources, both the option tracking, the 7 point analysis. We'll be sending that all to you once the classes are over, along with the upload of all of these classes. And if anyone can do a better job than me on the OTT or on the 7 point company analysis, I'm not very good at all this stuff. Please feel free to share, and we could use that also. Okay, so believe it or not, that is the end of the option strategy. It is not that difficult. The next thing we'll be doing tomorrow is I'm going to do for 90 minutes, go through an entire case study. I'm going to be using OKLO. I'll be giving you all the prints that are necessary that we had, the short term, mid term, and long term. I'm also going to, at the end, be showing you what I wrote out as the 7 point company analysis. And that's going to be tomorrow's class. At 12 o'clock in the next 15 minutes today, Naina Patel is going to be coming on, who is my aunt, who's a psychologist or therapist or whatever you want to call it in London. She was very instrumental in helping me get my mindset correct for day trading, for life, which really, really helped me become such an astute trader. She's going to be coming on and speaking to us about the mind, answering a couple of questions, and giving you guys half an hour of psychology. Do you guys want that or not? You sure? Doesn't seem like you're that interested. Davis needs psychology in general anyway, so I'm sure that's why he said yes. Donna, as we know, is a secret agent, so she doesn't need as much. Brilliant. So we got 15 minutes before Naina comes on. Prior to that, give me some questions. Does anybody want to get on and ask a question or just speak on something? Got 15 minutes. Derek had a good one. Was that where was that question? I'm sorry, I didn't see that. Could someone find that question, please? Or Derek, can you just come on if you don't mind, if you're able to get on a mic and just ask me? I don't remember that question, that's why. There he is, Millen. Let him on, please.
Hey, Doug, the question I had was if you could break down exactly how you analyze post trades, is there any sort of software that you're utilizing? How are you going through that full trade cycle when you're doing these breakdowns? Are you just pulling up like a Google Doc or kind of if you could walk through that, that would be really insightful.
So if you think about it, and I'm not sure why this isn't going back. So if you look at this is what you to remember. You're not reflect. It's not a software What are we really reflecting, Derek, when we look back at the trade? Are we looking technically at the trade or how well we optimize that trade, how well we manage that trade? It's really us and the trade. Because here's the reality. Am I expecting any of you to get the entire trade? No, of course not. We're not meant to get that. Our goal is to get 60 to 70% of the trade. But more so, it's how well did you stay disciplined? How on track were you throughout the trade? Did you have your moments of lapses? Were you not paying attention? So, when you come to strategies in business, you have to take into account possibilities of things coming in and changing, time of the year, seasons, changes in weather. In the same respect, how have you planned those 4 months to look? Did you just set a position, run away, and just keep checking in here and there? Or did you say, this position is starting to take shape? So, for instance, let's use the perfect ones. When did we all start seeing all these buying in these great stocks that made these massive moves? What month was it around about that we saw this? This company's only been open for 3 or 4 months. This happened in October. So if it's happening in October, you're only 2 months away from the end of the year. What did I keep on telling everybody that they should be looking to do come December, knowing what I told you is going to happen in January? Manage your trades. That's you planning for calendar time of the year. So, for instance, if you took those positions and you didn't manage your trade and you ended up not listening to me and taking January calls or January 17th contract end dates, and you didn't manage your positions in December where you would have been up massive in all these stocks, what would have most likely happened to your outcome come January when everything came down? Because you only got your time decay would have hit you. You'd have been at January 17th. You would have lost it. You would have made anything. You might have made a little bit, but the reality is you probably would have got even or made nothing. So it's not about a software as much as how did you plan to succeed in that trade, knowing and accounting for all internal and external factors. The reason that we cannot create one template for everybody is we all work differently. We all have different lives. We all behave differently. So, for instance, me and you might not be the same just because I wake up at 5 a.m. at night, in the morning, and I go to bed by 10:30. I'm at my computer by 8 o'clock in the morning or 7:30. If you woke up at 9 and decided you're going to start at the computer at 9:30, do you have the same advantage as me? Are you managing your time as good as me? Are you paying attention as much as me? No. So can you even correlate with me at that point about how my 4 months starts and how yours looks? Can you? No. The reality is that's the problem is how are you in the trade? And how did you understand the changes in trade? Absolutely. So that's a good question, Davis. So in terms of position size, I will tell you guys how I'll do it, but I'm not going to tell you the exact number. But this is how I would do it. If it was a 70% trade, you would say my maximum amount of calls I would take is, I'm just making this up, total calls is 50. If it's a 80% trade, you'll say maybe 100. And if it's a 90% trade, 150. But here's the absolute reality. If it's a 90% trade, you're going to take as much as you can. But let me ask you an honest question. If it's a 90% trade, and think about this, do you think I take more short term or more long term calls? Absolutely, Tim. If it's a 70% trade, am I taking more 4 months, 8 months, or 12 months? shorter. Why? Why do you think if it's a 90% trade, I'm taking a lot longer? If it's a 70% short, I'm a lot shorter. Have you ever noticed that short-term trades usually happen quick and done? And have you ever noticed the reason you got to 90%? Because it requires more alignment. There you go, Davis. It requires more. It means there's what? If it requires more alignment, what does that basically mean, Davis? That there's more what? There's far more money coming in. The more market makers that join the party gives rise to the percentage, gives rise to the validation. If there's one or two in there and you're like, this is nice buying, it should hit this, how many people need to hit a target then? One or two. So if they hit their targets and nobody else cares for it, what's going to happen to that stock? There you go. Once they're done, it could be very quick. That means it could just go right back to normal, because when you see high levels of volume, who's really managing that volume? Who's bringing in that volume? Who's that volume for? Keep going, Davis. When there's high levels of volume, as opposed to what is typically seen, and within that high volume is market makers, who's using the high volume? Who needs the high volume? The market makers. Without the high volume, what can you also assume when the high volume is gone about the market makers? What can you assume? They're not working it, or they're not there. I actually love that answer, Davis. And that's that's a great in-depth answer. And I'll tell you why he said that. Because he's saying they're either not working it currently, so involved now to get to a certain target, but they could have just put positions on for a long term. That means that they have no reasoning or belief system that this needs to go anywhere in the next few months, but this could be the next Facebook, this could be the next Tesla, this could be the next SMCI or Nvidia. You're not going to sit there and playing that every day. But either way, if it's got enough as a 70%, that typically means there's less market makers. There's less traction. When there's loads of market makers, consistently high volume patterns, legs up and consolidates at a new price point, does what we've seen all these stocks. Look at SMCI, all this buying. Look at OKLO in the 50s and now pulling back and building between 48 and 59. Let me ask you something else. Let's see who's really been. This is about analyzing the trade. Who can remember the initial calculated move, the exact number for OKLO? Who can remember? Austin, you better answer this. Millen, thank you. 12. What you lot doing? You want to talk about managing a trade? You all would have failed apart from Millen right now. 50? No, that's a target. I'm talking about the calculated moves OKLO's been making is around 12. So if it capped itself on the top of this consolidation at 59, what is more than acceptable for it to build in between? And what does that mean to the potential price target? 59 to what is actually acceptable at this length, at this stage? What can it build in between, Millen? Come on, Millen. 59 was the top. What is it acceptable for this to build in between? 47. He's thinking too much. 47. If it's building for $12 and it said 59, what do we think is a potential that this could get to? If you even take it and say a move halfway in between at $6, that's 53. What's 53 plus 12? What's 53 plus 12? 65. What else is 65? A huge psychological level. So what do we expect is there waiting for that market makers that get to 65? What will they find at 65? Liquidity. Brilliant. Well done, everyone. Okay, Milan, are we ready yet for Naina? Okay, so all right, I see PJ has one with the sweet spot. Wanted to confirm, do we aim for 250 when considering midterm and long term as well? What did I say about 250? I didn't say that you have to pay 250 every time. What did I say about 250? No more than 250. I didn't say you got to pay 250 because let me ask you something. And it's a good question, PJ, actually. Let's say you looked at the target and you saw all this acquiring at $10 on a stock that has zero range and now finally has all this volume after 2 years, and now it's starting to see range and volume. What's the chances that the premium or the price of the target, even the target, let's say the buying at 10 says, my gosh, there's so much buying here and so much great volume, this can get to 15. But let's say that when you looked at the price of the calls 4 months out, because you're so quick to it, the 15 price target in itself was $1. Does that mean that you want to go pay for the $10 target because it's 250? Or is that a time that you can truly get some serious multiples on your return? What are we thinking? Because I always told you one thing. We must always buy what? When we have such a great strategy based on prints, we're so far ahead of the move. Do we ever buy in the money or do we always buy out the money? Out. You want to get the big returns and the big multiples, OTM. And at the money, you might even be at your price target. It happens all the time for maybe $1, $1.50. So going upon that, PJ, if you were ready to buy let's make life easier. If you were ready to buy 10 calls for 250 and you looked and you're like, oh my word, this has been such a dormant stock that the premiums are so cheap. I can get the same strike price I was looking for $1. And let's say this was a 85% trade. What should you be doing? Let's see who can give me this answer. You could stagger in, absolutely. You could be staggering, but what am I looking for as the real answer? If you are willing to spend $2,500 to buy 10 contracts, and that same contract is only $1,000, buy more contracts for the same time. Go out the money more. Would you want to buy the same contracts? Or let me ask you something else. What if instead of 4 months out, because it was only $1, I decided, as Davis said or PJ said, not only am I going to just go ahead and buy my first position and buy 10 contracts at $1, I can go 6 months out, take the other 1,500 and buy another set of strikes. Now, if this is 85%, and I believe this is going to happen in far less than 4 months, because a lot of them clearly do, most of them can happen in 2-3 weeks. What I would do also, if I really see this is one of those little black swans and has so much potential to really do it, What do you think we could also do on the 4 months out? Apart from just the strike at $1, what could we also do? You can play the ladder. Play the ladder. What if the $20 strike? Because if it's an 85% trade, are we expecting one price target or the possibility of a second and third also? And we've got 4 months. Look at the stocks that we've traded. Look at the positions that we're in. Most of them aren't even 4 months yet. And look how far they've gone. They've hit and burnt through every price target pretty much. So then what if it was $1 for the 15 and it was 20 cents for the 20? Would any of you be looking to just load up the rest of your money, $1,500, and buy the 20s and maximize if it runs? And if it doesn't run and gets to 15, then what's going to happen to the premium of your 20s anyway? Are you guys following along with this? Your premium could go out the roof. And if it was, let's say, 20 cents and you got 1,500, you're basically now buying 40, 50, 60 more contracts. And if it goes by chance and makes a run to 25, could you imagine what the return on your investment is going to be? It's going to be massive. If you just look at very basic, one of the positions that I have taken on OKLO, it was 6,000, the first amount of money I put on there. It's at 77,800 in profit because I staggered it. So learn how to maximize. If you've got a high percentage trade and that comes on the heels of a dormant stock that did nothing for months and months and months, the premium's going to be really cheap until the stock starts getting more viral, until the premium starts catching up to the expectation. But at that point, you are well ahead and you've already set your foundation, and now you are going to be able to really maximize your multiples. Does that make sense to everyone? Just give me a yes, please. Perfect. Okay, that's enough of me talking. Naina is now on. I think she's available, Milan, correct? Milan.
Yep, I'm here.
Perfect. Okay, so hello, Naina. How are you today?
I'm good, thank you. Lovely to see you all, or hear you all, I should say.
Absolutely. And by the way, just to tell everybody, Naina is my aunt. She's basically like my second mum. I live a mile away from her when I go back home in London. And she, as I've told you, has been and witnessed my 11 years as a trader. She's seen me have temper tantrums like a 2-year-old toddler. She's seen me throw things around and blame the world. And she sat back and experienced my ridiculous psychological, emotional imbalances, waited patiently as she did, and has really helped me to get my mind right. Now, the question is, does she come and create a trading mindset, or does she help your mindset so you can become a better person and trader? And with that being said, Naina, the floor is yours for the next 25 minutes.
Hi, everyone. Some questions would be great if you all have any questions, but I'll tell you a little bit about myself. So, I have a degree in psychotherapy, and this was an opportunity that Doug brought me into market making strategies. And I thought, you know what? I'd love to do this. So, helping him doing what he's doing, but also my thing is about helping you guys to achieve what you're doing. Now, I've worked with a couple of people, and some of the stuff that I'm getting out of there is, really lovely because what I'm looking at is actually looking at the way you aren't doing something. What's stopping you from not doing something? And I don't know how many of you were on the podcast last week ago, I think it was 10 days ago, with Doug. And there was quite a lot of stuff that I took out of this. I don't know what you all took out of it if you did watch it, but it's about time and patience. And I think that's something that I've just got the tail end of what Doug was saying a minute ago about hello. And it's about sitting there and being patient. Now, one of the biggest things that I worked on with one of my other traders or one of you guys, it's been different. It's a different type of working. Whether you come from a background that you need to be working, which is physical, or you need to be working on a computer, you need to be going into an office and earning money. And I think that what happens is that this is a different type, that you're having to be patient and watching. And sometimes you may not make anything. Sometimes you may make something. So it's a very different type of working. But for each one of you, it's going to mean something different, which is where I would come in to explore with you, what does it mean for you to sit there, be patient? Patience could mean all sorts of different stuff with all sorts of different people. Patience could trigger things for you. Patience could mean watching it and being bored, and I'm sure some of you can relate to those things. But it's all about being patient and being time is there. I think the other thing that also, I don't know if anyone has any feedback, or Doug, you have any feedback on
I do. I was going to say for you, what we could do, Dana, is as you're bringing up these points, I will put them into perspective as a trader, and then you could talk upon it a little bit more. So let's talk about what you just said in patience. I thought that was actually really interesting, and I'll tell you why. I thought what you said about how your attention towards patience is at that moment. Are you bored? Are you excited? So, are you basically saying the way that you come and show up in that form of patience and how you accept the data is how your brain calculates what you thought about what you're seeing?
I think what I'm going from is a slightly different angle, but again, it's very individual. Is being just patient can actually trigger something inside of you. So for me, if I just had to sit here and watch screens, I've been to your house, I've seen all those screens going up and down and all those different colors and flashing and all of that, I would have a panic attack maybe. And that panic attack I'm having or an anxiety attack I'm having is actually something that I could say, this isn't me, but I could say something like from a childhood. It's triggered something else inside of me. So if I'm working with you guys as an individual, it's what has it triggered? That's what patience would mean. Patience is what is it triggered for you? Does that make sense?
So you're basically saying it's nothing to do with the actual computer screens in front of you, but some form of pre-existing condition or situation that triggers that response system from you being patient at that moment or being in front of all these screens.
Yeah, absolutely. But it could mean something totally different to everybody. But I'm just giving an example from what you're saying. And yes, it can mean something pre-existing and something's coming up for you and you don't know how to deal with it. So that means your mind has now gone blank because you are sitting with a trauma or you're sitting with something else or your mind has gone elsewhere, which means you are no longer focusing on what you're supposed to be focusing on.
It's funny you talk about this because do you remember some years back we were sitting and I was explaining to you that, and I know you're going to remember this fondly as well, is I said to you, every time, and this was probably about 5-6 years ago, I said, I still go to the computer and sometimes I get anxiety in my stomach, but I'm not anxious. And you were like, what do you mean? And I said, I sit there, I'm completely fine, go to the gym, eat breakfast, do all that things, come back. I sit in front of the computer and I get anxiety at the top of my stomach as if my body or my stomach is telling me, get ready, something you don't understand or something bad's going to happen. But yet mentally, I don't feel that way. And I remember you saying to me, well, have you addressed your relationship with your platform? Have you addressed how you feel when you sit down? Have you took note and accounting of that? Do you remember that?
I do remember it. Remember, as soon as you said it, it clicked to me exactly what you were going to say. So yes.
And so going upon that to all the students, when Naina talked to me about that, and don't get it wrong, this wasn't just a 30-second conversation. This was a good deep dive into what that means to me, and we broke that apart. Is I realized that I wasn't coming here to find comfort in what I love. I was coming here to try to get away from things that weren't giving me comfort, which then increased my anxiety being around on this platform. Because one thing we know why a lot of people find it hard to be traders is if you have codependency issues, whether that's with a partner, whether it's a family member, whether it's you need team members around you. I can't be in a space alone. That's going to make it very difficult from the moment you sit at your computer, isn't it?
Absolutely. And that's
So,
exactly, yeah.
for me, if you remember, it was what could I do? And I said to you, I just need to listen to the right type of vibrations or sounds, and that will help me to reestablish what I want this to mean to me. If you remember that.
Yeah. And that's what
So,
with the students too, is that sometimes we need to find out why something is happening. And one of the key things I say to everybody is write it down. And I don't mean just bullet point it on a piece of paper. You flick your book across or pages across, and you've done the same thing again a month later. And you do that again. What I'm trying to get people to do is do it in a mind map format. So you've only got one big piece of paper and you're mind mapping it. That this has happened again and again and again. And then we can address why does it keep on happening, at what time of week, month, year, and then you'll start seeing a pattern. And then we realize, and that's when we can do a bit of a deep dive to say, what can we do to address it?
correct. Okay. And that also, so that was a strong point. One of the things, and obviously this is all coming from years of experience, I've gone through all the changes and all these situations that the new students are going through as well. And a book that I read, and something that it's funny because I read this book called Gap and Gain, but if some of the students will remember, I did this I created this understanding and with these bubbles, and I'd write in the bubbles of where you were year one, two, three, four, and who you were as a trader in year one, how you progressed to year two, how you progressed to year three, and what in those progressive steps has been centered and so strong that it's hindering you from really finding that consistency is also intertwined within that fabric. And it's funny because I don't know how many of these students, I know some of them remember me showing them that chart, but it's interesting because when I read this book called Gap and Gain, what they talk about is it's so much easier to find success when you chart success from how far you've come and find confidence in the progress that you've made and what you've learned, as opposed to saying, I'm not where I need to be. I want to be here. Where is the perfect situation? Because the reality is the mark is always moving. You're never going to be always totally satisfied because once you've reached a certain stage, now you're looking for the next one, aren't you? So
Yeah,
one of the things I think that really curtails positive progression is when we're always trying to be the person we're not ready to be just yet. We have to know who that person is, understand what that's requiring, and take those steps, but it's not going to happen in one day. It just won't.
absolutely. Absolutely. And this is where patience comes back in, right?
Exactly. And being patient with yourself, being patient with your trading. And the only way to really enjoy and love your trading is to love the journey of what it takes to get to where you want to be. Right?
Absolutely. Which is why taking a note of where you are today, where you want to be, is a forecast that you're doing. but also if you think about where you've come from and what you're achieving. Because sometimes we see things only in our past as being sometimes negative, but there's also positives there too. So we can reflect back on the good times as well.
Yep, that's true.
Because
Beautiful.
negative things have adrenaline, and the higher the adrenaline, the longer it takes us to recover from it. So we will remember that bad thing a lot more than we will a good thing that's happened. So make notes of good things that are happening to you as well as bad things.
Agreed. Agreed. That's such good, strong points. So what we're going to do now, Nana, is I would actually like one thing that this whole course and MMS believes in is active participation, not passive. You learn a lot more when you're active and you're involved. So I'd love to have some hands up, and you guys can come on and just speak to Nana about any current situation or dilemma that you're facing mentally, and speak to her about it. Maybe this is just one small conversation could really help your trading. So I'm just going to take myself off mic. Please raise your hands and come on and speak with Nana. She's given her time to us. Milan, please do it now. Look, you can see Kevin on.
Hello, ma'am.
Hi, nice to meet you,
Yes,
Kevin.
I'm doing well. Just had a quick question as far as really more pertaining to morning routine, what you may recommend as far as getting yourself in that mindset of being free and clear of the worries and the stress of everything, the anxiety. Are there any processes you would recommend, or just thought processes in general?
I would say your morning routine actually starts from your night routine.
Okay.
So your night routine, if at the end of the day, if you can journal a little bit of how you felt, what's going on, so to almost like download what was happening in your day, you're going to get a better night's sleep. Okay,
Okay.
average trying to get a good 8 hours sleep. And then in the morning, when you get up, you should be that little bit more fresher. And then have a good morning routine. My routine, and I know Doug's routine, is probably about the same. We get up, we go to the gym, have a good breakfast before we start working. Doesn't matter what time we work, but that is a daily routine that I have. So at night, and the other good thing to have a shower before you go to sleep, even if you have a shower in the morning, because what it does, it actually sets you up to sleep. No computers half an hour beforehand, no blue light as we call it. So you're really getting into the zone. It's all about your night routine, to be honest, and then your morning routine will just fall in place. Does that help?
Yes, it does. Thank you so much.
You're welcome. Anybody else?
Come on, you got her on here. She's in here from London. Use this time wisely. This is what's going to change. Remember, we're all different. We don't all have the same situations or the same things that are stopping us. Davis, here we are.
Hi, Davis. You might be muted.
Yeah, I think I got it now. Can you hear me okay?
I can hear you. Nice to meet you, Davis.
Nice to meet you as well. Thanks for being here. Sometimes the psychology for us seems very easy, and seems that we're swimming with the current.
Uh-huh.
And then there's other times where, and maybe it's a day that you show up, or maybe you feel it creeping in, where it feels like things are constantly upstream or
Yep.
cross current. And I'm wondering if, in your experience, and Doug, I want you to talk on this from a trading perspective as well. Is it usually a creeping thing? Do we meander off course, or is it usually something that pushes us out of a present state of mind? And is one of those easier to address than the other? And maybe some tips on how to do that.
So, Davis, first thing I'm going to ask you is, do you want to give me a real solution where you have found that you are meandering or you're going upstream instead of flowing with the flow?
Well, just in trading, there are times that you are very much in the flow of the information that's coming in.
So can you remember a time when this happened to you specifically?
Sure, at the end of last year.
Okay, so what else was going on for you at the end of last year?
Not a heck of a lot.
Okay, so what I would start with is that if you are meandering or you're going upstream and you're doing the opposite to what you normally do, is to have a reflection of what is actually going on for you. Now, sometimes if there wasn't a lot going on for you, think of maybe the weather. Is there the weather that something's changed in the weather? Now, what I'm saying is that we all have rain, sunshine, and snow if you're lucky, if you live in those countries or areas. And is that triggering something for you, which is why it's sort of actually making you go off track a little bit? Does that make sense?
Yes.
Yeah. So I don't know if that's answered your question, but normally there is a reason behind why something is happening, but we need to understand the why. So
So,
something needs a bit of exploring.
Nina,
And then,
I'm
real
gonna,
quick, Doug,
I'm gonna give you something real quick here, Davis,
please
just
go.
to go on that. I actually have an understanding of how Davis is,
Uh-huh.
and Davis is, if I were to put it firmly, he is someone that gets bored when it's not exciting. He's someone that would say to himself, is it worth my time? Because I know my value and what I will place. I think with Davis is if he's not seeing the outcome that he appreciates, he's getting bored. And that's what happens with people who are usually a bit too smart and a bit too logical. They will create pathways of does it fall into the value that I give it? And I've been there. I know exactly what he's talking about. So for someone of how you are, because I can relate to you, Davis, it's not until that consistent success comes that it will start becoming more attractive to you. I don't think trading is attractive enough for you yet. And I think that's for most of you. Realize one thing: trading is never going to be attractive because it's so much effort, work, and sometimes boredom until the results start adding up. Unfortunately, that is very true for trading because you don't see impact until you see the end. You can own a business and you'll find impact for how your team members are improving, how your business partners have improved, the clients and customers and their reactions and reviews. Those are impact along the journey that you can put in the good bank, put in the impressive bank. In trading, unfortunately, it could take a long time of work, 11 years for me, and you don't truly see the sense and purpose of it all until you start getting the outcome. Does that make sense?
Yes, and I can't help but think about what you said was one of your greatest advantages was expecting things to take a long time, which I can't say that I did coming into it.
That's a good one. And that was because coming from a hotel background, the second you invest, whether that's building or buying a hotel, you know you've got a runway of 3 to 5 years before you stabilize and see some profits. So time is not a problem for me. But do you remember, in the same respect, Davis, I used to tell you all that day trading was impossible for me to hold a trade for even 10 minutes because I'm not used to that.
So would we also say, Davis, here, I mean, again, I don't know you and your background, but you like the adrenaline that it gives you when things are going in the right direction. And when they're not, because they're stagnant, it's not giving you the same adrenaline feeling.
Sure. And in a previous, I guess, psychology session, I've identified this as one of my internalized money habits as well, sort of the quick happenings of things. So Doug's spot on with that.
Hmm.
And going to your comment about weather, I live in part of the world where from December to now. It's snowing outside right now, so sitting here, I'm trying to get that excitement and have in the past from the three screens in front of me, which is certainly a losing proposition.
Right. Okay. So there's a lot of stuff around, you being happy and excited and looking at other things that I'd say in my world would be something of what else can you get outside of this sort of 8 hours or 9 hours of a screen that gives you the buzz that you're looking for.
Yep, and I'm just sort of putting some pieces together on my end when I thought the question was time that I was in the flow, and so at the end of last year there wasn't a lot going on, but the
Yeah.
trading itself was exciting. So now coming into the new year, it's been a different market for the last 60 days, 50, 60 days, and again, inside still not a lot going on, but there's not the same level of interest coming from the screens. And so that's maybe what I could trace that to knocking me out of the flow or not holding my attention. So back to a earlier comment, if you're not here looking at it and you're not engaged in the same way, then that's where you sort of get off sync.
Yeah, absolutely. And just sometimes looking at so that's, you got your answer there. But then looking at on the other side of the coin is almost like, what can I do to still give me something else that's going to give me the excitement? So when I come into trading, I know and I'm aware nothing may actually happen. So you're not trying to look for the same answers in the same thing every day.
One thing that, and this is for all traders, and I know as we're going, we're also feeding you data about
Yeah,
all our individual approaches to trading. But one thing that will really help all traders, and I'm glad that Davis and you are having this conversation because it allowed me to open up to this. When I come to the computer, and as we're speaking, I'm going to have them type in the room. Do I come to the computer in our form of trading as someone looking to trade or looking to follow? Type that in the room. Do we come looking to trade or looking to follow? So if you're looking to follow, up to that point, you're analyzing, you're on the touchline, on the sideline, and you're waiting for the presence of the variables that allow us to follow. The presence of a market maker, the correct volume. So if you come in with the mindset of I'm looking to trade, I'm looking for a trade, you will get bored very easily as a tape reader. But when you recognize that the clock starts once I see who to follow, that will improve the attractiveness of this form of trading. Does that help you, Davis?
Yes, Doug.
That's going to help you massively, knowing that you don't kick on until they kick in.
Well, and I'm going to track actually my activity outside of trading and see how closely it mirrors, because there's something to that. If you show up and you want it to be fun, you're going to find out very quickly it's not. But if you can show up to follow, then you might catch the fish that way.
Yeah, you will, because you're not sitting there expecting things that don't need to happen. When you show up to trade, you're expecting things to happen that don't need to happen.
and that's when I guess you can probably end up being desperate for something to happen, so you make the wrong moves.
Absolutely. And guess what happens, Naina? If I remember, I told you years back, the biggest change that cleared the pathways for my trading was when I was very, very, very mindful about what I did before I went to sleep, what I heard, what I listened, what I watched. Make sure I have a clear mindset, make sure I'm well rested. And as Naina said, what you do at night is it precludes what's going to happen in the morning. So you're going to wake up with whatever you went to sleep with. All that happens through your sleep routine is that thing is like it's like an oven. All that stuff is cooking, and it's finding its systems, and it's getting segmented and it's getting absorbed into your system. So you wake up and you're ready to go on those last night's thoughts. So I do not have social media. I have not had social media for 5 years. I do not watch news. I do not just open up and listen to irrelevant things. I'm really aware about who I have my deep conversations with. All of these things is you training your mind to do exactly what you want it to do, not what others want it to do. So half the reason you guys are going through all these emotional states is because of your exposures. You've got to control as much as you can what you're exposed to in order to keep that mind clarity and clear for what you want it to function for. Do you agree with that, Foy or Nina?
Yeah, absolutely. I totally agree with you. And I think that, one session I'll do with you guys is about sleep hygiene at some stage, which will help you answer some of those questions as well at a deeper level.
Absolutely perfect. Now, is there any more questions? Nina is going to be doing far, 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 far more, but this was just for her to introduce herself to the group. Oh, I have one here, Nina, for you. Hi, Nina. Thanks for doing this for us. I have a question. I find myself having this is from PJ, by the way. I find myself having 1 day a week where my mind and brain is operating on a 28 to 30 hour day, and I can't get to sleep until I've been up for 20 hours straight. This often throws my schedule off or causes issues. What would you recommend to try and calm my mind or break this pattern? I don't drink or party regularly, so when I have these 20-hour mind days, it's not related to any substance or anything like that. It's just a mental thing for him. I took the note of incorporating journaling at night to unpack my mind and to improve my morning routine. Is there anything else I should try in conjunction with this? And that's from PJ.
PJ, what I would say to you is let's have a session. I'm happy to give you one session about this. There's a lot more to this probably to even unpack. One of the things on group I'd say right now is that if you're having to do a 28 to 30 hour day without any sleep, you're sleep deprived. And with that, it's not going to help you at all. So we need to get a better sleep hygiene in, which will actually help you. So happy to give you a one-to-one session to take this a little bit more deeper with you, if you'd like that.
There we are. Well, I'll tell you what, Nana, we have given a lot of complimentary stuff. So I didn't expect you to put anything here complimentary. But would you be willing to do this one just so that we can have it for recording, for you to get better with your data and understanding? Could we give PJ a 30-minute complimentary session?
Yep, by all means.
Done. Well done, PJ. Somehow you got that out of there. So I think PJ deserves this 30 minutes. And Davis, you did come on and ask questions. Do you mind if Davis gets his 30 minutes too then, Foy?
Yep, he can have a 30 minutes as well.
Absolutely perfect and brilliant. Just want to say, Nana, thank you so much for taking time out. You're over there in London joining us for this session, which I did ask you very last minute because I wanted you to come on. So thank you. Everybody just please type in and thank Nana for coming in and giving us her time. She's very busy and she is part of market making strategies. You'll be seeing a lot more from her. And there will be psychology classes that she will be having starting very soon also. Thank you very much, Nana. And on that note, thank you all. Options class number 5 is now completed, and we will be doing our case study tomorrow. You all have a lovely rest of your day. Thank you so much. Nana, thank you so much.
That's okay. Thank you all as well. And don't forget, tonight is the first night when you're going to do a little bit of journaling and you're going to try having a better sleep by having a shower or something to cool your body temperature down a little bit so you get a better night's sleep. And good luck. I think if you get in touch with Miller, he'll give me your details, PJ and Davis, and I can arrange a 30-minute session with you both.
And it's over. Thank you very much, everyone. Enjoy the rest of your day.